Welcome back. You're tuned into Bazaar Morning Call and hope you're having a great morning. Well, to help you out with some fundamental analysis, Deven Choksey, MD at DRChoksey Finserv, joins us on the show. Hi, Deven. Good morning. We'll get to Reliance in just a bit, but I wanted to ask you about HCLTech. You know, the numbers look pretty okay. The problem is that the stock is trading at premium multiples in comparison to its averages. And now it's trading closer to Infosys as well as TCS, which is something we haven't seen in the last many years. Your view on the stock at current levels, and what do you like from the tech pecking order, if you could give us?
Hey, Nigel. Good morning. Well, certainly the numbers are more or less in line with expectations from HCLTech. And if you go past, I think, some previous quarters, I think the indications were very obvious and clear for the new contracts that they've been winning. The most important part of the commentary in those contracts, they have been talking about the margin accretive businesses. So from a perspective of looking at the validation today in this result, I think you find that the commentary has played out, which was made in previous quarters, about, I think, the growth in the business along with the margin acquisition. And at the same time, we are also seeing the growth continuing in the current financial year as well as next. So from that perspective, the visibility is far more clear. Management, I think, commentary is also far more confident. And that's where probably, I think, higher amount of allocation of money has happened in this particular stock. Maybe I think everything is priced in at this point of time. May not be seeing, I think, a very large upside, but quite possible that I think if you see the sector rotation or the stock rotation within that, then possibly I think the stock might find a little favor. It may not go down in hurry at the same time. So probably I think any correction in the stock price after the result, that could invite some more entry of the funds into the stock in the investment portfolio.
Okay, that's as far as HCLTech goes. Deven, hi, morning. Reliance Industries itself, and of course, we have to break it up and discuss it in at least three different parts, right? I want to start with the retail operations and what you thought of the slight softness that we had there. The top line growth was not as fired up ahead of the festive season as one would have thought. So, do you think this is just a temporary lull? What did you think of Reliance Retail first up?
Yes, Sylvie. Good morning. Well, maybe I think you may call it as a partly an impact of the quarter, or partly you may also want to call it as an impact of some amount of consolidations that they are doing in their operations. The best part out there, I think, and that is a validation of this viewpoint, that the EBITDA margin has been improving very systematically. About 8.8, 8.9% kind of EBITDA margin that they are being reporting, as against the previous year, I think, which was somewhere around 7.5%. So systematically, if you look at the vertical-wise retail, probably they are weeding out some of the lesser profitable businesses and putting more emphasis on the larger amount of margins which are being generated from likes of electronics. The fashion and lifestyle part of the business, I think, is remaining slightly under pressure. Maybe it's slightly temporary. Maybe it's that slightly changing the format. They are adding the youth format in this particular segment. Seeing the success of video, I believe that I think they are probably adding and catching up with the youth format. So maybe I think in subsequent quarters you might see the fashion and lifestyle also catching up. The grocery part of the business, I think, is remaining slightly muted, largely the impact of the quick commerce, which also, I guess, I think they're trying to cover it up through their own GeoMart stores. So maybe this quarter can be, I think, a one-off. Maybe I think one could see relatively better performance, seeing the consolidation which is happening, and particularly more because of the new brands which they are bringing on their own. That is assuring that they will have the margins protected in the business.
By the way, there was this news item on Tech Wabag, which was flashing. There was 1,000 crore order, or around 1,000 crore order, which was flashing. Stock was up sharply after. I mean, it's kind of gone sideways for many weeks now, but 7% pop yesterday, and it's closer to 1,700. Deven, any thoughts? Have you guys looked at this one closely? Not the order, but the company per se. Yeah.
Yeah, Prashant may not have seen the order per se, but I think over the last few quarters, once again, this particular company is largely thriving on the new orders, largely because of the infrastructure spend which is being incurred in the country and the waterways in which this particular money is being spent. I think where this company is significantly more prominent player. So that is where they are winning the contracts in every successive quarters of a larger size. But I'm very careful about one aspect, that these contracts do take longer time to get executed. And that's where probably I think you will find that the immediate reflection in the working of the company may not be seen at a larger level. At the same time, I think the business becomes extremely working capital intensive at one point of time. Having seen, I think, the larger amount of execution, the collection of money takes its own time. So all in all put together, I believe that I think this particular business, if it is trading at a significantly high premium, then probably one will have to be a little bit more careful about. No doubt the prospects are bright, but the valuations are pricing in everything at this point of time.
Okay, all right. Deven, let's finally ask you about the banking names as well. And HDFC Bank, yesterday it was the big driver in trade. Technically, it's very close to its 20-day MA, but fundamentally closer to around 1,700 rupees. What's the view? Do you think its time has come to give up its underperformance?
Yes, I would think so, Nigel, because for 2-3 points. On one side, the size of the balance sheet is definitely, I think, making a case for the larger amount of participation into the expansion of the AUM that this company can have. The larger projects definitely demand larger institutions to support them, and that's where HDFC, SBI, kind of larger banks, I think, will figure in. In my viewpoint, I think they could continue to grow the size of the business along with the housing finance portfolio in the vicinity of around 18%, 17 to 18% AUM book size. So that is where probably I think the opportunity size is big. On a size of 25 lakh crore AUM, I think it's a big opportunity size. I think that we are talking about. On the other side, the valuations are not far expensive, and that is where probably see contra buying opportunity also happens. I think in some of the funds. In my viewpoint, I think since this stock has been a little underinvested by most of the funds, probably this contra buying opportunity is being seized in right now, and that's where we are seeing the re-rating in the stock. We would remain positive about the possibilities, and as I maintained in the past, I think should they show some kind of a signs with the fintech platform that they will get in, probably the retail part of the business I think could really spring up very well. So one will have to look at this part of the possibilities eventually.
Deven, I'll just go back to Reliance to now complete the overall picture, right? The sum of the parts. You expressed the views on retail earlier. Jio, of course, has been a stunner this quarter, right? With this 7.4% ARPU growth. Oil to chemicals is slightly mixed. So what's the overall takeaway? The stock has cooled off 15% from the highs. I mean, tactical reasons, FPI selling. I think there's just a lot going on over there. But what would the advice be on Reliance now? What do you expect, say, over the next 6 to 12 months?
Consumer-facing business is both retail as well as Jio platform, the digital business. I think they remain absolutely very, very strong and convincing. On one side, you have got the customer base, which is 47, 48 crore customers. Other side, I think you also have the contributing customers, which is, I think, significantly increasing. Increasing the ARPU is helping them. Jio Fiber, the connectivity with home is definitely adding more to that particular possibility. In my viewpoint, I think the amount of implementation of AI that they are having across different user verticals, be it education to agriculture to healthcare to fintech or even e-commerce, I would think that I think this company is talking about phenomenal amount of platform as a service provider kind of a business going forward in the digital space. So from a perspective of looking at this business, I think they are not only showing the sustainability and the growth, but also showing a big, significantly large amount of growth and the promises. Today, I think if they are growing at around 16-17% or 17.5%, I would think that I think 20% kind of a growth rate in the profits could possibly be possible, possibly I think materialize in coming quarters also. So one remains, I think, distinctly positive about Jio platform, its prospects in the entire portfolio of Reliance.